Assalamualaikum warahmatullahi wabarakatuh. Today, our group will present about the segmental reporting and interim reporting for CIMB Group Holdings Berhad. Our group members consist of HIDAYATI binti Mohammad JOHARI, DURRANI INDRARINA binti KAMARUL AZMAN, and BASYIRAH binti ROSLI, and me myself, Norilyanie binti Mohammad. Let's begin for the first part of segmental reporting, which is company background. Cimb Bank was established in 1974 with the name of Pertahanan Barang Sanwa Multinational Bank (PBSM) in Kuala Lumpur and launched by the Prime Minister at that time, Tun Abdul Razak Husin. After the acquisitions by Bank of Commerce in 1986, PBSM changed the name to Commerce International Merchant Bankers Berhad (CIMB). In 2003, Cimb was listed in Bursa Malaysia, but the listing was lasted only for 3 years and delivers returns of 340% to the shareholders. In 2005, Cimb acquires Geographical Securities in Singapore. To create a universal bank in a major corporate restructure, Cimb acquires sister company Bumiputra Commerce Bank from holding company Commerce Asset Holding Berhad (CAHB), which being renamed to Bumiputra Commerce Holdings Berhad (BCHB). In 2008, Cimb Niaga was established through a merger between Bank Niaga and Bank Lipo. Cimb Group also acquires Bank Thai and renames it to Cimb Thai in the following year. In the following year, Cimb Group launched the retail banking operations in Singapore and also acquired 19.99% stakes in the Bank of Macau, China. In the same year also, the holding company BCHB being renamed to Cimb Group Holdings Berhad. In 2010, Cimb Group launched banking operations in Cambodia, which bring the retail banking presence to 5 Asian countries, includes Malaysia, Indonesia, Singapore, Thailand, and Cambodia. In 2012, Cimb Group started acquisitions of most of the Asia-Pacific cash equities and associated investment banking businesses of the Royal Bank of Scotland and expands the operations in Sydney, Melbourne, Hong Kong, London, and New York. Cimb Group also acquires Geographical Securities, a Thai stockbroking company, for the same year. In the following year, Cimb Group completes its Asia-Pacific investment banking platform with the new operations in Taiwan, India, and Korea, and moves into the new 40-store headquarters in Menara Cimb, located at the high-tech hub of Kuala Lumpur Central. For the year 2016, Cimb opens its first branch in Vietnam. This subsidiary is owned 100% by Cimb and allows to establish the presence in the country as a universal banking platform and strengthen its banking franchise in ASEAN. In 2018, Cimb received approvals from the Bangko Sentral ng Pilipinas (BSP) to establish and operate its banking businesses in Philippines. With this approval, Cimb Bank Philippines Incorporation launched its digital retail banking business in December and establishing Cimb's presence in all 10 ASEAN countries. As for the year 2020, Cimb Group has become the 5th largest banking group by assets in ASEAN, and as at the end of December 2020, Cimb had around 34,000 staffs and over 60 million customers.
Next, I'll be presenting about the management approach. The first one is factors to consider having a segment reporting. In order to identify our business segment, there are 3 factors that we need to consider, and they are nature of the products or services, type or class of customer for the products or services, method used to distribute products or provide services. Let's move to the first segment, consumer banking. The first factor to be considered is the nature of the products and services. In consumer banking, we offer products and services such as residential and non-residential property loans, secured personal loan, motor vehicle financing, credit cards, and others that stated below. The second factor to be considered is type or class of customer for the products or services. We provide our products and services to individual customers and small businesses. The third factor to be considered is method used to distribute products or services. Our customers can access our products and services through these delivery channels such as online banking, mobile banking, self-service banking, which is via ATM, and others that stated below. In commercial banking, we offer products and services such as banking credit facilities, trade financing, cash management, and others as stated below. We provide these products and services to small and medium-scale enterprises and also mid-sized corporations. Our delivery channels are consist of online banking, our dedicated relationship managers, and also others as stated below. In wholesale banking, the products and services that we offer to our customers are investment banking services, cash and trade products, financing solution, and treasury and market products. We provide our products and services to retail, high net worth individuals, and others as stated below. They can access these products and services by using our delivery channels, such as iTrade and online trading platform. The last one is CIMB Digital Assets and Group Funding. In this segment, we are providing these two products. The first one is CIMB's portfolio of digital businesses and ventures, which consists of Touch and Go, TNG Digital, and CIMB's digital bank businesses in Philippines and Vietnam. In other hand, group funding, which consists of capital, balance sheet, and fixed income investment and management, and also others as stated below. Our customer segment are joint venture and equity and non-equity partnership. Cashless payments platform and digital platform are the type of delivery channels that we use to distribute our products and services in this segment.
I will explain the type of segment. There are two types of segment, which are business segment and geographical segment. There are four business segments in CIMB Group Holdings per head, which are consumer banking, commercial banking, wholesale banking, and CIMB Digital Assets and Group Funding. Consumer banking provides everyday banking solutions to individual customers covering both conventional and Islamic financial products and services. Commercial banking offers products and services for customer segments comprising SMEs and mid-sized corporations. Next is wholesale banking. It comprising of investment banking, corporate banking, treasury and market, transaction banking, equities and private banking. Investment banking include end-to-end client coverage and advisory services. Corporate banking offers a broad spectrum of both conventional and Islamic funding solutions ranging from trade, working capital lines and capital expenditure to leveraging, merger and acquisition, leverage and project financing. Treasury and markets focus on treasury activities and services which include foreign exchange, money markets, derivative and trading of capital market instruments. Transaction banking comprises trade finance and cash management, which provide various trade facilities and cash management solutions. Equity provide broking services to corporate, institutional, and retail clients. Private banking offers a full suite of wealth management solutions to high net worth individuals with access to a complete range of private banking services, extending from investment to securities financing to trust services. Another business segment is CIMB Digital Assets and Group Funding. It drives all strategic partnership across business lines group-wide and explores strategic equity joint ventures in the ecosystem space. Next is Geographical Segment. There are four geographical segments, which are Malaysia, Indonesia, Thailand, and other countries comprises of Singapore, United Kingdom, China, Cambodia, Hong Kong, Vietnam, and Philippines. Malaysia is the home country of the group, which include all areas of operation in the business segments. Next, Indonesia. The areas of operation in this country include all business segment of a subsidiary bank, PT Bank CIMB Niaga Tbk. Third is Thailand. The areas of operation in this country include all business segments of a subsidiary bank, CIMB Thai. Lastly, other country. The overseas operation involved mainly in corporate lending and borrowing and stockbroking activities. With the exception of Malaysia, Indonesia, and Thailand, no other individual countries contributed more than 10% of consolidated net interest income or assets.
Next is identify the CODM and its responsibility. Firstly, Chief Operating Decision Maker is a person whose function is assess the performance of the operating segments of an entity and decide on allocation of resources to the segments. So, the group has actually determined the Group Executive Committee as its Chief Operating Decision Maker. And the members are consist of 10 of them, which is Dato Abdul Rahman Ahmad, Omar Siddiq, Khairul Rifai, Samir Gupta, Effendi Shahul Hamid, Raf Hanif, Victor Lee Mengtek, Tigo M. Siahan, Paul Wang Chekin, and Ahmad Shahriman Muhammad Sharif. The Group Executive Committee is established to review and make decisions on key financial and strategic matters including capital and principal investments, and others as well as stated below. The Group Executive Committee also responsible to provide oversight of management responses to risk and compliance issues, including to assist in the formulation of the Group CEO's response to risk and compliance issues and to monitor management actions to improve the control environment in order to manage risk events and compliance breaches. Moreover, they are responsible to review, approve, and recommend all major and key strategic matters, and others as stated below. In conclusion, Group Executive Committee are responsible to ensure that the group is well run and delivers the outcomes which have been set by the Group CEO.
Next, I will explain the process to reproduce the segmental report. Firstly, I will explain the process to identify reportable and non-reportable segment. Operating segments are only required to be reportable if they exceed 10% threshold test and 75% threshold test. First, 10% threshold test. There are three ways to calculate the 10% threshold test, which are by using revenue, profit or loss, or assets. If we use revenue to calculate 10% threshold test, we need to use total internal and external revenue of each segment. They must exceed 10% of combined revenue of all operating segments. If we use profit or loss, total profit or loss of each segment must exceed 10% of combined profit or loss of all operating segments. Lastly, if we use assets, the assets of each segment must exceed 10% of combined assets of all operating segments. Operating segments that do not meet the 10% threshold requirement are not classified as reportable segments. It will be combined and disclosed under all other segments category. Next, 75% threshold test. 75% threshold test can be calculated by combining external revenue of identified operating segments. It must exceed 75% of total external revenue of all operating segments. If total external revenue of existing reportable segment is less than 75%, we need to identify more reportable operating segments even if they fail the 10% threshold test. Next, we will apply the quantitative threshold test on Cimb Group Holdings per head. Here, we have 5 operating segments, which are Consumer Banking, Commercial Banking, Wholesale Banking, Cimb Digital Assets and Group Funding, and Islamic Banking. We will evaluate whether these 5 operating segments will be reportable or not. We decided to use revenue from each segment to calculate the 10% threshold test. First, we will add the internal and external revenue from each segment to get the total revenue for each segment. Then, we will use the total revenue of each segment divided by total revenue of all operating segments and times with 100. Those segments with percentage of more than 10% will be classified as reportable segment, and those with percentage lower than 10% will be classified as non-reportable segment. For Consumer Banking, we get 41.22%, Commercial Banking 19.07%, Wholesale Banking 24.21%, Cimb Digital Assets and Group Funding 4.25%, and lastly Islamic Banking 11.26%. In conclusion, Consumer Banking, Commercial Banking, Wholesale Banking, and Islamic Banking are classified as reportable segments, while Cimb Digital Assets and Group Funding is classified as non-reportable segment. Next, we will conduct the 75% threshold test. We will combine the total external revenue of Consumer Banking, Commercial Banking, Wholesale Banking, and Islamic Banking amounting to 10,419,524 ringgit divided by total external revenue of all operating segments amounting to 11,355,442 ringgit times with 100. We will get 91.76%, which exceeded the threshold of 75%. This means that the reportable segment will remain and we do not have to identify more reportable operating segments. Next, we will construct a new segmental report of Cimb Group Holdings per head. We will start the segmental report with external income and internal income. The total external income of operating segment is 11,355,442 ringgit, while the internal income is 160,106 ringgit. Then, we will add other income and less expenses, resulting a profit of 2,055,610 ringgit. Next is segment assets and liabilities. Total assets for operating segments is 745,335,096 ringgit, while total liabilities is 678,102,444 ringgit. Advantages of segment reporting. The first one is improved content. Segment reporting allows stakeholders to get a better perception of the fluctuation that might affect overall numbers. If a business report higher earnings more than expected, it will show where those earnings are coming from. The stakeholder can see the same report to identify if the numbers are feasible, and it also can help investors to understand the business and its potential cash flow. The second one is separating profitable segments. For a businesses that operates in a different categories or geographic areas, it can disclose which areas are profitable and which areas are drained on the bottom line. For example, if the segment reporting shows that operations at overseas are more profitable rather than domestic operation, it could give rise to a change in strategic direction. It could keep the manager from hiding unprofitable ventures. The third one is respect decentralized. Segment reporting is the best way to analyze the profit and losses for a sector for businesses with many sectors. However, it is also respect the fact that many businesses that have several sectors are decentralized. There is usually a person or group of people that heads the sector. The financial analyst is focusing on the sector and the sector heads. Thus, a financial analyst does not praise or criticize on a company itself, but can remark on the company's sector leader. Disadvantages of segment reporting. The first one is time and analysis. Segment reporting may be seen as a large absorption of time. For example, many losses are shared beyond the sectors. Taxes, especially property taxes, if the sectors share one building, is a shared expenses between all sectors. This segment reporting may be unessential in its property tax reporting for each sector if the sectors of a business use the same building. This theory could prove time-consuming and make it hard to qualify how each sector is performing, especially if the sectors share resources or capital with each other. The second one is emphasis on present. Segment reporting could place too much focusing on the short-term numbers. For example, a business may create a division just for its online work. This division could run a significant deficit before the right hand and infrastructure are placed in. If these losses are overshadowed by the company's overall performance, they might not stand out the financial statements. However, breaking out those numbers as a data point through segment reporting can bring to pressure to minimize those losses to enhance short-term earnings. The third one is data manipulation. If the information reported is through management eye style, the segment reporting can lend itself to the data manipulation. This could give company leaders more carefulness to identify how segments are built and what measures are reported. Managers might build group together businesses with another businesses models. Basis of preparation interim reporting. Interim period is a separate period and the reports are prepared on a periodic basis of quarterly. The audited condensed interim financial statement have been prepared in accordance with MFRS 134, interim financial reporting issued by Malaysian Accounting Standard Boards and paragraph 9.22 Bursa Malaysia Securities Berhad listing requirements. The unaudited condensed interim financial statement for period ended 31st December 2020 have been prepared under historical cost convention except for financial assets at fair value through profit or loss, debt and equity instrument at fair value through other comprehensive income, derivative financial instrument and non-current asset or disposal groups are held for sale, and financial liabilities designated at fair value through profit or loss, and all that have been measured at fair value. Accounting policies. The group shall apply the same accounting policies in its interim financial statements as are applied in its annual financial statements, except for accounting policies change made after the date of the most recent annual financial statement that are to be reflected to the next annual financial statements. The accounting policies that have been used in this report is depreciation policies, which is the group are using straight line method over useful life on their asset for the previous financial period and the current financial period. The second one is changes in estimate. There were no material changes to financial estimate made in respect of the current financial period that been previously announced or disclosed than those disclosed under the basis of preparation.
Next is identify the types of interim reports prepared by the company. The type of interim report that we prepared is condensed statements. We presented these statements at a minimum of headings and subtotals as per latest annual financial statements, selected explanatory notes as required by MFRS 134, and basic and diluted EPS on face of SOPL and other comprehensive income. The examples of statements that we provided in our interim financial report are a condensed statement of financial position, a condensed statement of income, a condensed statement of other comprehensive income, a condensed statement of changes in equity, and a condensed statements of cash flows. And also, please be noted that we separated the statement of income and the statement of other comprehensive income into two different statements. Next is identify the period for the current and comparative of each statement prepared by the company. Our company has 31st December financial year end. We presented our financial statements in quarterly, which is in the fourth quarter. The current year ends were on 31st December 2020. These are the periods for which interim financial statements are required to be presented. For the statement of financial position, the period for current interim report is on 1st January until 31st December 2020. Meanwhile, comparative period is on 1st January until 31st December 2019. This is because we are taking the date as at the end of the current period and also at the end of immediately preceding financial year. For statement of income, they are consist of two periods in current interim report and its comparative, which is the first one is on 1st October until 31st December 2020 and the second one is on 1st October until 31st December 2019. Meanwhile, the second period for current is on 1st January until 31st December 2020 and as well as its comparative on 1st January until 31st December 2019. This is because we are taking the date at current interim period plus comparative interim period for the first period and at cumulative interim period plus comparative cumulative period for the second period. This method is exactly the same in order to determine other comprehensive income, and that's why the period are the same as the period of statement of income. For statement of changes in equity as well as statement of cash flow, the period for current interim report is on 1st January until 31st December 2020. Meanwhile, comparative period is on 1st January until 31st December 2019. This is because we are taking the date as at the cumulative interim period and also at comparative cumulative period.
So now let's look at the adjustments in the income statements of Cimb Group Holdings perhaps. As you can see, the green colors indicates the before effects of the adjustments and the pink color indicates the after effects of the adjustments. First adjustment is modification gain or loss. As you can see, Cimb Group Holdings perhaps received modification gain. This will lead to the increase in net interest income by 4,000 ringgit from 2.615 million to 2.619 million. Second adjustment items is expected losses on loans, advance and financings, and other expected credit losses and impairment allowances. After reduction of expected losses, the profit dropped drastically from 2.38 million to 130,000.